It's hard to imagine that the banking regulators will give up control over that. They're not going to want a shadow bank to be able to move hundreds of billions or trillions of dollars around without some banking oversight. So I would suspect the FDIC or Treasury or some banking regulatory organization and FinCEN will be involved looking at digital currencies. The status quo or the conventional view of the administration last week was the only thing that a digital exchange can trade is Bitcoin, and they wanted them to stop trading everything else. Here's a company, Apple, everybody trusts. You've got all the disclosures. Why can't I self-custody Apple stock on my mobile phone?
Michael Saylor begins by categorizing digital assets into three main classes: digital commodities, digital currencies, and digital securities. Digital commodities, such as Bitcoin, are decentralized and have no issuer, making them similar to traditional commodities like gold. These are likely to be regulated by commodities and futures exchanges. Digital currencies, like stablecoins such as Tether and Circle, are pegged to traditional currencies. Saylor notes that banking regulators will likely oversee these due to their resemblance to traditional banking products and the potential for systemic risk if mismanaged. On the other hand, include tokens launched by companies or celebrities. Saylor uses the example of a hypothetical Tom Brady coin to illustrate how these tokens can be influenced by their issuers, making them similar to traditional securities. As such, these would likely fall under the purview of securities regulators like the SEC. Saylor emphasizes the importance of consumer protection in this space, noting that without proper regulation, investors could be at risk of fraud and other malpractices. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
If you break down the asset classes in crypto, you have digital commodities, an asset without an issuer, reasonably decentralized, no entity can control it. That'll probably float to the commodities and futures exchange. Then you have digital currency, like Tether, like Circle, a stable coin. It's a crypto token that represents a dollar or a euro or a yen. It's hard to imagine that the banking regulators will give up control over that. They're not going to want a shadow bank to be able to move hundreds of billions or trillions of dollars around without some banking oversight. So I would suspect the FDIC or Treasury or some banking regulatory organization and FinCEN will be involved looking at digital currencies. There's an aspect of digital currencies that also makes them sort of security-like, because whoever sold the $100 billion of digital currency invested it, and maybe they have the money and maybe they don't have the money, right? So if I sell you $1 billion of digital currency and I take your money and I steal it, okay, well, that's a problem, right? So so you kind of look like a bank, right? And so I expect probably banking regulators will probably get involved there. Then there's a third aspect, digital securities. It's a token that's being launched by an entrepreneur or by a company, and there's, or maybe Tom Brady coin or something. And if Tom Brady launches Tom Brady coin, obviously Tom Brady has a lot of influence over the value of Tom Brady coin. And if Tom Brady says he's going to issue 10 million and he issues 100 million, then, that's kind of a securities violation, right? So I think that probably at that point, there'll be somebody like a securities regulator. It'll either be there, or maybe it'll go to Consumer Protection Agency. Like if Tom Brady sold you a million concert, or maybe Katy Perry sold you 1 million concert tickets, but then she canceled the concert and she didn't actually give you the money back. Like, who would you complain to, right? So I feel like probably there'll be some Consumer Protection Agency that may get involved in digital tokens that are issued by companies and celebrities. And then if there's digital securities, the Securities and Exchange Commission will get involved. I mean, the big question really isn't can I issue a token without disclosures and trade on a crypto exchange? The bigger question is, why can't you trade Apple stock on a crypto exchange? Like, here's a company, Apple, everybody trusts. You've got all the disclosures. Why can't I self-custody Apple stock on my mobile phone? Why can't I send a share of Apple stock from me to you on Saturday? Why can't I sell the Apple stock on Saturday night? Right? That's an interesting question, right? But it's totally ethical. It's totally progressive. Why wouldn't you want to be able to do that? And right now you can't. The good ideas, the progressive ideas in the crypto universe and digital asset space are the idea of self-custody, ability to transfer peer-to-peer, ability to trade 24/7, 365, ability to write a program that will programmatically trade Apple stock on Saturday afternoon or Sunday night while I'm sleeping, right? These are all very progressive ideas, right? All that innovation has been shut down in the traditional finance market for 40 years. There is no API to trade stocks on the NASDAQ, like that an entrepreneur in South Africa can write against on an Android phone, right? So coming back to your question, I think ultimately the question of what's the digital assets framework is a legislative one. And that'll be worked out between the House and Senate and the administration. I think that the question of which agency should regulate it, well, it's really a question of what's the nature of the asset. Is it a Katy Perry token? Is it a security? Is it a commodity? Is it a currency? And then there'll be a question of, well, who regulates the exchanges? Will it be the Commodities Futures Exchange, or will it be the SEC, or will it be somebody else, and will the exchanges be able to trade all these different asset classes? The status quo or the conventional view of the administration last week was the only thing that a digital exchange can trade is Bitcoin, and they wanted them to stop trading everything else. Well, that's going to change, right? That's changing this week. And so when you have the digital assets framework come out, they're going to define all these things, and they're going to define the safe harbor, and then they're probably going to define who regulates what, and there's going to be a political back and forth. I think that what's good for the world and what's good for America and what's good for the industry is, a clear digital assets framework that allows people to pretty aggressively develop digital art, digital tokens, digital securities, digital commodities, digital exchanges, and then all of the mobile software, nodal software, internet networking software, and bot software that actually creates value from these things. That would be good for the world. It would expand, it would grow the industry from 2 trillion to 100 trillion pretty quickly. It would create a lot of efficiency in the civilization and empowerment.
As noted by Saylor, was that digital exchanges should only trade Bitcoin, but this perspective is evolving. A comprehensive digital assets framework will define the safe harbor for various asset types and outline who regulates what. Saylor believes that such a framework will be beneficial for the world, America, and the digital asset industry, potentially growing it from $2 trillion to $100 trillion. This expansion would create efficiency and empowerment, much like the Internet did in its early days. Saylor draws parallels between the current state of digital assets and past innovations like online poker and prediction markets, which faced regulatory challenges despite their potential benefits. He acknowledges that the best ideas don't always align with the political system, but he remains optimistic about the increasing consensus around digital assets.
I was of the opinion that all the prediction markets and all the, remember trade sports, or 10 years ago, people can bet on the outcome of anything. I thought that was a really good idea, and the politicians shut it down. It was like online poker or online gambling. They did shut down a lot of online gambling, and even today, they regulate it. So what's the best idea isn't necessarily what the political system will support. What you could say optimistically, though, is there seems to be a lot more consensus to do something. And I think that the likelihood as of 2-3 weeks ago was nothing was going to happen until after the next election. Now I think the likelihood is something will happen before the next election or before the next administration. And then whether we, like, maybe we're like 2 on the dial of 1 to 10 of crypto adoption. We're like a 2, like grudging Bitcoin and everything else under question mark. And I think we'll get to a 4 or 5 by the next election. And then probably if you have a very progressive administration, they'll dial it up from 5 till 7 or 5 to 8. And if we have a more regressive, skeptical administration, maybe it'll get to 4 or 5, and maybe it'll creep to 6 over 40. A week ago, I would have said it's grudgingly pro Bitcoin, and the rest of crypto is highly uncertain until after the election. But there's a massive political shift just this weekend, and this week, I would say what we have is a political environment which is pro-crypto, very pro-Bitcoin. The Republican Party has gone from crypto-friendly to crypto-passionate, and the Democratic Party has gone from crypto-unfriendly to crypto-moderate. So one party's moderately supportive, and the other party is passionately supportive. So the entire Overton window has just shifted. And I think that that's very auspicious for the asset class. What that means is that crypto is an asset class. It's a political movement that's too powerful for anybody to stop. There's no politician is going to win any votes by being anti-crypto, and probably they'll lose elections by being anti-crypto. And I think that's becoming pretty clear.
Saylor notes a significant political shift towards crypto adoption. He observes that the Republican Party has become increasingly supportive of crypto, moving from being crypto-friendly to crypto-passionate. Meanwhile, the Democratic Party has shifted from being crypto-unfriendly to crypto-moderate. This shift in the Overton window suggests that crypto has become a powerful political movement. Saylor believes that being anti-crypto is no longer a winning strategy for politicians, and supporting crypto could become essential for electoral success. He concludes by highlighting the importance of a clear digital assets framework that allows for aggressive development of digital art, tokens, securities, commodities, and exchanges. This framework should also support the development of mobile software, nodal software, internet networking software, and bot software that create value from these assets. Such a framework would foster innovation, drive growth, and enhance the global financial system. Please like and subscribe my channel.